For all you Ethereum fans out there, have I got a video for you. Ex-Goldman Sachs hedge fund manager Raoul Pal has just released a white paper showing how Ethereum could be going to $20,000 in this next bull market cycle. This is obviously a huge claim, so in this video I'm going to be breaking down exactly how he came to this price target. The whole premise of the white paper is built on the fact that Bitcoin and Ethereum grow in relation to Metcalfe's law, also known as the network effect. So to get everyone up to speed, I'll share exactly what Metcalfe's law is, and also I'll share the charts that show exactly how Ethereum could be going to $20,000. For anyone interested, I will link below to Raoul's white paper, as it is an excellent piece and well worth a read. For now, just to say, if you do find anything interesting in the video or just a big fan of Ethereum, be sure to drop a like. That would be much appreciated. Okay, sit back and relax. Here is the breakdown of how Ethereum could be going to $20,000. Okay, so this is what we've got coming up. We're first going to take a look at who is Raoul Pal and why should we listen to him. And then, as the premise is built on Metcalfe's law, we'll just quickly take a look what exactly is Metcalfe's law. And then I'll show you the charts that reveal how Ethereum could be going to $20,000. First up, who is Raoul Pal? Well, he is a macro investor, and this is the opposite of micro, so he's not a specialist, he's a big picture investor. He is a former Goldman Sachs hedge fund manager. Through some smart investments, he was able to retire at age 36. He's the founder of Real Vision, which also has a great YouTube channel that I highly recommend you guys checking out, as he does a lot of interviews with big institutional investors. So ultimately, this is a guy from the hedge fund and institutional side of investing. And interestingly, he calls his crypto investing irresponsibly long, as he's well known for putting a large amount of his investable assets into crypto. I think initially he had over 50% of his money in Bitcoin, and now between Bitcoin and Ethereum, it could be as high as 80% of his money being in crypto. So Raoul comes from the world of hedge funds and institutional investing. It's great to see more and more institutional investors getting into the crypto market. Just last week we had Ray Dalio saying he's now looking into Bitcoin, and we also had Elon Musk changing his Twitter profile to #Bitcoin. And of course, all of this is great for Ethereum. So, as mentioned, Raoul recently released his white paper on the crypto market, and the central premise was that Ethereum grows in relation to Metcalfe's law. So what exactly is Metcalfe's law? Well, let's take a look. Metcalfe's law states that the effect of a network is proportional to the square of the number of the connected users of the system. Probably better to take a look at a visual. So this example is a telephone network, and you can see we've got just one connection, we've got 5 connections, and then we've got 12. So when there's only one other connection, this means you have one connection. Now, when there are 5 different people, you may think you get 5 connections, but in fact, you get 10. And when there's 12 different people, this now begins to grow exponentially, and you get 66 different connections. And this is the true power of a network. The more people you add, you begin to get this geometric growth. So the more people in the network, the more exponentially valuable the network becomes. Think about when the telephone was first invented. An amazing invention. However, if you're the only one with a telephone, then it's kind of useless. The same was true with fax machines, dating websites, social media websites. In fact, one big complaint that people have with Bitcoin and Ethereum is that they say it's not that valuable because someone can just create another one. But the problem is, building up a network and getting traction is incredibly difficult. It's like saying, why don't people just create another Facebook? Well, in fact, Google did try that and spent millions and millions, and this powerhouse still couldn't make it work. Once a network begins to get momentum and adoption, it's actually incredibly difficult to stop or replicate it. That is the power of Metcalfe's law. Okay, moving on. Next, Raoul says that the Ethereum price is tied to its network size. Let's take a look. So what are we looking at here? So the time frame is roughly about the last 5 years. Now the white line, this is the amount of Ethereum active addresses. And the blue line is the Ethereum market cap. So what he's basically showing here is that it is almost exactly correlated. As the Ethereum addresses grows, so does the market cap. As the Ethereum active addresses drops, so does the market cap. So we can see the price is correlated to the amount of people in the network. And is the network growing? Well, this chart shows the Ethereum unique addresses. And you can see from 2018, we're having this huge growth. So this growth in unique addresses indicates that we're going to see a huge growth in the Ethereum price. So, as you can see, the Ethereum price is tied to its network size, and its network is beginning to grow exponentially. We really are seeing a true force of nature at work. Okay, now for the time that you've all been waiting for. How does Ethereum get to $20,000? Well, the next big point that Raoul makes is this. It's a mistake to compare Bitcoin and Ethereum like for like, and this is because Bitcoin started 6 years before Ethereum. So Bitcoin is basically 6 years ahead, so we have to take this into account when we do our analysis. And the great thing is that Ethereum is showing the same adoption pattern as Bitcoin did. So here it is. This is how Ethereum gets to $20,000. Okay, what are we looking at here? So this is showing that the Ethereum network is almost identical to the Bitcoin network at this time. So because there's a time difference, what this chart is doing, it's lining them both up, but this time when they both had 1 million addresses. So it's lining them both up, accounting that they both started at different points, and now look how correlated their growth is. It's a very, very close correlation, and it means that if this is going to continue, then the Ethereum price is going this way. And if I could only show you one chart which pretty much sums up this entire video, this one would be it. So this is the same chart as the last one, but this time it's a logarithmic chart. So again, it's lined Bitcoin and Ethereum up from when they both had 1 million active addresses. And you can see the correlation between the two. It's very, very close. And then more recently, we've had this big growth trend. And if Ethereum continues to do what Bitcoin did, then this is what is going to happen. And this is how Ethereum gets to $20,000. So there you are, guys. That was the data that shows that Ethereum could rise 16 times to $20,000. This also means Bitcoin would rise 9 times to $350,000. It says that Ethereum would be outperforming Bitcoin by 2x, and the growth is coming from the same kind of mechanisms. A great narrative, a platform for programmable money, and also, of course, Metcalfe's law. And what I personally like is that this isn't just another kid in his bedroom shooting a video on YouTube saying this. This is an ex-Goldman Sachs hedge fund manager. So there you are, guys, potentially very exciting times ahead for Ethereum. So just one favor to ask, if you did find anything useful in the video or just a big fan of Ethereum, be sure to drop a like. That would be much appreciated. If you haven't yet subscribed to the channel, be sure to click below and join us. I do have some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.
Never before have I seen something that allows so many people to participate in massive change. To buy digital currencies and own them is available literally to everybody because of how low you can make the price, the decimalization. So you get to own a part of the future. And it's not just owned by the venture capital guys or the big guys on Wall Street. It's all of us can participate. Forget everything you need to know about any of this. But if you're thinking about how can I benefit from this without knowing all the technology or anything else, it's giving you a stake in the future, and we can all invest in it. That is something extraordinary.